Good morning, MMTs. Here's a New York Stock Exchange gap open. Now, just like yesterday when the buying started, is that we would monitor it and we would look at the expansion. We would look at the expansionary gap prices in pre-market. And we would be looking for that expansion so that we would know that when they pull back, here's the caterpillars. Look, we've got a long line here this morning, and that's called an increased pre-market extensionary or extension gap from the previous day. And that when the risk list gets longer, more people are putting money to work at the end of the quarter here. And we had some BlackRock BLKs been added to the S&P 500. VRX is up. They're the ones buying the CEPH on the NASDAQ, but they're still up. And so you can see CMG, that's another one, restaurant stock. That was good off the bottoms. It was a great short during the reversals we had. But here's the thing. Is that the market would be building that momentum, which is going to take these indexes higher so that you would see the very same thing that you seen yesterday in your SMF MMT platform in pre-market, okay? And basically, we had broad-based buying across the board. Yes, we did, and we have all of that there for you and all the trades from yesterday and, watching all the sectors and indices and everything of where that broad-based institutional buy power was. But most importantly, MMTs, as a market maker that you are, you're making a market between the public. This is the public. And basically what's going to happen is the shorts are going to cover again. They covered yesterday. That helps the upside move. That's exactly why we are long across the board. Because when we didn't go lower in our yearly index delta formulas, we knew that we had to start buying the leadership, in which we did. And how we would show you that stock prices would automatically leverage up in price value based on those indexes hitting the yearly formula lows. And when they stop going lower, that stocks would have intraday shorts and intraday longs, but would be accumulated down there in the negative ranges and then would make higher highs. And understanding the mechanics of the market versus your little chat rooms that you all like to go to, that doesn't get you nowhere. This is a system that does. That I can tell you. And it won't mislead you either. And MMTs will make a market today so that when these very strong names, there are some good ones in here. And it's broad-based again. And one of the things is the ADP report and the unemployment report coming out on Friday. And that's this coming Friday. So basically, we had a Friday and a Monday that was weak. And we had the big buy program that broke out on 329 with a follow-up gap sequence, just as we said here at SMF, before the fact, not after the fact. And it's very important that knowing these things and how they're going to work and then preparing yourself with trade management so that you do get these gaps overnight. We do them all the time. That's how price volatility, it's called re-leveraging up the bottom. Bottom up has been in play. All aboard, train leaves the station. Fund managers have got to put money to work, as we said. They come in at the end of the month. It's the first quarterly trade of January, February, March of 2011. And not only that, MMTs and other friends out there, is that this is how price action and markets get made. And there's a behavior pattern process that will happen. And there's a difference between the public model, as you've learned in your market making school, the yearly apprenticeship program here, is how to trade all of these. And how to short weakness and how to go long strength and how to be in ahead of the moves and how to prepare yourself. Earnings season will be coming. It's a nice gap. The gap opened down. Notice that, yes, but the penny gaps, these are all very diminished pennies right here. You do not have any big length of any big gap downs. So basically in price action today, on all the stocks that SMF covers as a market maker in both this particular arena, the NYSE and the NASDAQ comp, by the way, is that we are going to get new price actions and we are going to have price action bounces today because that's what they're going to do. And there will be pullbacks the pullbacks will be diminished. That means they're going to be contracting when they do a 369 pullback, but then bam, they bid pop it and the price breaks out higher. So don't expect that you're going to get all day long on a short when the tape says quite the opposite. They're just a debit trade, and they're going to be like anything. They have to pull back in price, but it's going to be diminished or contracting on the pullback, and you'd be looking for that. In your platform will tell you what that heavy 3-minute buy action bar, and bam, getting in, knowing that you're holding it, and using your market maker tools that SMF has provided you so that you can make markets with the public and you can understand price action momentum and gap prices and pre-market and headline events, and most importantly, the end of the quarter buying that we have live yesterday. And then of course we have the market live here before us now, before the opening bell in 15 minutes on 3/30 of 2011, right here, right now. Okay, and basically there isn't any fear, and the gaps show it. The trade management, I've already told you, will be the same as it is in every pre-market morning. You are not trading negative deltas, you're trading positive deltas. I'll see you in the trading room, MMTs.